How happy are you to see this semi-normalization on the 10-year yield?
Well, I expect there's more to go. I mean, but the real big deal is the vaccine. And if you get an economy that goes with all the stimulus that's coming, and obviously there's going to be a lag, right? People are getting sicker, but the vaccine works. People can resume life. People can see the future, and rates will go higher because there's more stimulus coming from everywhere around the world. And the curve will get steeper, and eventually the banks will have a yield curve.
Isn't it amazing we're talking about maybe getting to 1% as some kind of like high mark for the 10-year yield? I remember when it broke below 5%, Anton. I probably interviewed you then, and we couldn't believe it. I mean, does 1% matter for these companies? Can they make the incremental net interest margin on that?
Well, it matters that it's better, right? People's forecasts have lower margins, lower rates for next year into earnings. And I think the biggest issue here is the recovery from a credit perspective, right? Banks are not getting killed. They're not losing a ton of money on credit. And a vaccine gets people to resume and people to pay their bills and life to go on. And, with a lot of lessons learned here from what's gone on here. The supply chain's coming back to the U.S. Doesn't matter who the administration is. Funding is cheap. Nobody wants to deal with trying to bring stuff from overseas right now, whether it's a disease, whether it's tariffs. So I think there'll be some strong growth in the U.S. And we've also seen, from a future lending perspective, a lot of depletion of inventories. So there's a lot of work that has to be done in the U.S. to bring our inventories back. So GDP's, obviously record quarter last quarter, a pretty strong bounce back.
Are you a buyer of Wells Fargo?
I am a buyer of Wells Fargo. Lots of rumors they're selling different divisions. Lots of talk about massive cost cuts coming up to $10 billion a year in cost cuts. So you're going to have a leaner, smaller Wells Fargo focused on its core. And the earnings power of this company is far greater than what we've seen. And I think the industry as a whole, including Wells, will have far too much capital going into the next year. How much will they be allowed to, buy back? What can they do in dividends? Question mark among the big, but the small are already out there buying stock back.
One thing we love about having you on, Anton, is you always bring us these names. They always end up, by the way, getting bought later. So you have great timing and great performance on that. Who is Live Oak Bank shares, and why do you like them so much?
Well, they're the largest position we have in our mutual fund. And one of the reasons we like them is they're the largest SBA lender in the country. And Honor used to belong to Wells Fargo, and they've used a lot of technology in getting there. They're improving their deposit product, which will allow them to have much better margins in the future. Deposits do matter. And they have a tremendous position in fintech, which is, helping the entire industry evolve into being more profitable and better delivery channels, cheaper ways to do things. And they're spreading that fintech out to others. They have a position there. So it's a real hybrid. But the SBA is a big deal. The PPP is a big deal. Maybe some new programs will help as well. And that is one of the only bank stacks that's up this year, and it's up tremendously.
Shepard Smith here. Thanks for watching CNBC on YouTube.